Thanks so much for joining us. I'm Marlon Bowling with you, and happy Thursday to you. I am joined this time around by Brian Hoops of Midwest Market Solutions. He is in Springfield, Missouri. And Brian, it's Thursday. That means it's weekly export sales day. We just got the new numbers in a short time ago from USDA. Let's take a look at what we had this past week. On the corn side, let's visit there. It looks like 927,600 tons. If you combine both marketing years, the old crop portion of that, 782,400 tons. Soybeans, you have a combined total of 1.1 million tons. You had the wheat coming in at 379,300 tons. Now, on those soy products, we had soy meal at 66,200 tons. You had soy oil at 6,200 tons. And then, of course, we always get numbers as well for grain sorghum and cotton and rice. Here you go with grain sorghum. Net reductions again. I believe this is, what is this, Brian? 3 weeks in a row of net reductions on grain sorghum. 10,500 of net sales reductions on sorghum. Cotton, only 127,300 running bales. And the rice, I think that's a marketing year low of only 8,300 tons. So all in all, your take on these weekly export sales numbers here, Brian?
Yeah, good morning, Marlon. It's interesting, these numbers that are coming out, because we have a supply and demand report out tomorrow morning. So when you look at the corn sales, they were just below 30 million bushels for the week. We only need to be averaging around 15.9 or 16 million bushels to reach the USDA forecast. So we've been well above that over the last 7 or 8 weeks. And that calls for the USDA to raise their export profile in tomorrow's report and tighten up our ending stocks numbers. Same thing for the soybean market this morning. The export numbers were around that 29.4 million bushel mark. We only need to be averaging about 2.5 million bushels to reach the current USDA forecast. So we're looking for soybean balance sheets to tighten up tomorrow as well as the USDA increases export forecast in the report. So we're right ahead of this report. We're seeing some really strong numbers for corn and soybeans compared to where we need to be to reach the USDA forecast. Wheat, it's not the same case. We are right in line with the average pace needed for the wheat market to reach the USDA forecast. They only have 800 million bushel export forecast for the rest of this, for this entire marketing year, and there's only about 8 weeks left, and we're right on that pace as our export sales continue to be pretty dismal. I think this was the slowest March of exports for wheat in our history, and a lot of that has to do with the prices that we rallied to in the month of March. The expectation was with Ukraine out of the export market, the world would come to the U.S. for our export needs, and that was not the case at all. We saw, very poor sales for the wheat market, and a lot of that, as I said, was due to the sharply higher prices that we saw as the wheat market really took off and rallied when Russia invaded the Ukraine.
Did we get CONAB numbers this morning that may influence the trade today?
Yeah, the CONAB numbers were out this morning as well. They estimate Brazil's corn and soybean production numbers. So they lowered the soybean number just slightly, though. I think from 122.7 million tons down to 122.4. Now, the USDA, I believe last month was at 127. So they do need to come down a little bit, but that's a far cry from some of the private analysts in the month of March that were talking 115 to 117 million ton soybean crop. It just shows you that the rains have stabilized the crop during the month of March and actually increased the crop estimates. Corn, the CONAB actually increased their estimates for the corn crop, the second corn crop in Brazil. They are around 117 million tons. USDA, I believe, is like right around 114 or 115. So they could actually increase the size in tomorrow's report, but it's still fairly early in the growing season. They have another 6 to 8 weeks before they harvest this crop. So weather will be a major factor going forward on the size of the second crop of Brazil's corn, which is a huge influence on how much exports we'll see during that same period of our U.S. product. If they have a smaller crop, if drought sets in once again, you could bet that we're going to see a renewed surge in our U.S. exports.
Well, the markets were mixed after these numbers came out, and here's a quick look. On the corn, we were down on the May contract. The quotes provided by bar chart here showed it down 4 cents at 752.5. The December was only down 1.5 pennies. On the May soybeans, they were 4.5 higher at 16.24 when we wrapped up this evening trade. November was up 7, though. In the wheat that you were talking about, May Chicago wheat down 4. We had July down 3 cents. In Kansas City wheat, you had the May contract finishing up 6 lower this morning, and July was down 5 cents. And Minneapolis spring wheat trade had the May actually going down 2 cents, while July was down 2.5. We also had beef and pork export numbers, and we'll take a look at those when we come back in just a moment. Well, we're back with Brian Hoops. We had beef and pork export sales numbers that were out this morning. Brian, let's take a look. And on the beef side here, we had a total of 14,000 metric tons that were sold last week. On the pork side, we had a total of 41,200 tons. This time around, I don't see China mentioned as a buyer of U.S. beef. However, they did show up as a buyer of 13,000 tons of pork. Now, that's a switch from recent weeks.
Yeah, you're right, Marlon. They're out of the beef market, so I don't know that we're going to see a lot of support out of this beef sales report that we saw this morning. This is pretty much just routine, kind of a far cry from what we saw a couple weeks ago when our sales were marking near high. But pork sales were decent, and I thought very strong again. So we're selling a lot of pork. China's the #1 buyer, of course. This could be supportive for the hog market, but hogs seem like they're kind of ignoring fundamentals, trading more technically based, whereas the cattle market should be looking at the fundamentals. And I think they kind of did yesterday, trying to more align the fundamentals with where the technicals are trading at. So we'll see if we can see a little follow through. I think we will in the cattle on the opening this morning.
Interesting. All right, let's look at where we finished up yesterday on live cattle. And when we finished the trading session, we actually had the live cattle on the April contract 90 higher. June was also 90 higher. We finished up yesterday with the feeder cattle market on the April up 97 cents, and May was 95 cents higher at 159.95. Lean hog trade, well, yesterday we closed the session with April up $1.07 at 98.75, May up 77. Thanks, Brian, for talking with us. I appreciate that. Brian Hoops of Midwest Market Solutions. We're going to open things up at the bottom of the hour, Janet.